Ever since we were little, we were taught to go to school, study hard, and get a job so that eventually we can start making a living. And because we don't know any better, we go to school, maybe study hard, and then get that job. So now you go to work day after day, week after week, month after month, in exchange for a paycheck every 2 weeks. After a while, you might start thinking, is this what my life has become? Working for money? Now those last 3 words, working for money, is actually really important. It is so ingrained in us that we have to actually work for our money. But we are rarely taught how we can actually make our money work for us. So in this video, I'm going to talk about how you can utilize dividend investments to start getting your money to work for you. What's up everybody? My name is Daniel and welcome to my channel. So dividend investing has become one of the most popular ways, especially on YouTube, of how you can actually get your money to start working for you. Before I talk about dividends and how to build a dividend portfolio, I want to talk about the 2 ways you actually earn income. So the first one is active income. It's the one we're all familiar with, where you're trading your time and services in return for money. Now the second one is passive income. That's where dividend investments come in. So passive income is when you actually put in little to no effort, but you still get money for it. So here's an example of passive income I give to people so they can understand it better. Remember in Lord of the Rings when Elrond, the king of the elves, at least I think he was the king, when he assembled a group of warriors, the Fellowship, so they can actually go to Mount Doom and destroy the One Ring? Well, imagine yourself being Elrond, and the group of warriors that he assembles is a group of dividend stocks that you make, and the Fellowship is your dividend portfolio, and their goal was to destroy the One Ring, but your dividend portfolio's goal is to make you money. I hope that example actually makes sense to you as it does to me. So now that we went over the difference between active and passive income, let's actually get into what a dividend is. So a dividend is just a portion of a company's profits paid out to you, the shareholder, for holding on to their stock. Now imagine it as a company giving you a thank you card every 3 months, but instead of it being a card, it's actually just money. I used every 3 months is because most companies pay out every 3 months or quarters, but there are also companies that pay out every month, once a year, or twice a year. It just depends on the company itself. Now that you know what a dividend is, let's talk about why does a company pay dividends. It's usually because a company has gotten so big, it doesn't know what to do with the profits anymore. So instead of just hoarding it for themselves, they'll pay it out to their shareholders. And that's the beauty of dividend investing. You'll be paid for just buying and holding on to these companies. Now that you know a little bit about dividends, let's talk about how you can utilize them to build yourself a monthly paying portfolio. And if you stick around to the end of the video, I'll show you 4 of my favorite dividend stocks that I own in my Robinhood portfolio. So I think the best place to start, especially if you're a beginner, is to look at dividend aristocrat companies. So dividend aristocrats are just companies that have paid and grown their dividends for 25 or more years consecutively. Now there's another level to that, which is the dividend kings, which is the same thing, but they just paid and grown their dividends for 50 plus years consecutively. The reason I think those are good companies to start with is because they have shown the track record that they can pay their dividends even through multiple recessions. Just think about 25 to 50 years ago. That is multiple recessions that these companies were able to not just pay, but grow their dividends through. So now that you know where to start your research, let's talk about how to actually build a monthly paying portfolio. So there are actually 2 ways to do this. So the first way is to buy and stack different companies so their payment quarters don't overlap with each other. Let me show you an example. So I'm only going to use 3 different companies for this example, and they happen to all be aristocrats or kings. The first company I will buy into is McCormick. They're a company that specializes in one thing, and that's spices. If you go into your kitchen and look at your spice rack, they're probably all from McCormick. So McCormick's been paying out their dividends for 34 years, and their payment quarters lie in January, April, July, and October. So the second company I will buy into is Procter & Gamble. So if you don't know who Procter & Gamble is, they are a giant consumer goods company. They own companies like Dawn, Tide, Febreze, and a lot of other brands. So they've been paying out their dividends for 57 years consecutively, and they pay out their dividends in February, May, August, and November. Now, the third company I'll use for this example is McDonald's. Now, we all know who McDonald's is, so I'm not going to go into detail of what they do, but they've been paying out their dividends for 43 years, which is an aristocrat about to be a king, and their dividend months fall on March, June, September, and December. And with only these three companies, I built a portfolio that pays you dividends every single month. Now, I wouldn't suggest only having three companies in your portfolio, but that's a good way to start. So there is actually a second way to do this, and that's literally just to buy into a company that pays you monthly dividends. Now, the only difference between these two strategies comes down to taxes. Now, I'm not a licensed CPA, so please take what I'm about to say with a huge grain of salt. There is two different types of dividends, a qualified and a non-qualified. The basic difference is qualified dividends are dividends that are taxed at capital gains rate. So capital gains rate is maxed out at 20%. So for 2020, I believe it was 0%, 15%, and 20%. And on the opposite end is non-qualified dividends. Those are taxed at your normal income tax rate. And most companies that pay you monthly are non-qualified dividends. Now that is the surface level understanding of taxes I have, so please consult a qualified CPA for all your tax questions. And actually on that note, a full disclaimer, I'm not a financial expert and you should not take this video as financial advice, and it should only be taken for entertainment purposes only. Now before we jump into my portfolio, there's two more things I really want to get across to you guys so you don't make the same mistakes that I did when I first started. So when you start researching dividends, you're probably going to come across a thing called dividend yield. Please do not chase dividend yields. This is a mistake a lot of beginning investors make. So the dividend yield is just how much the company pays out in dividends relative to its share price. Because the dividend yield is calculated using the share price, if the share price drops, the dividend yield actually starts going up. So a lot of new investors see a high dividend yield, but they don't do the research of why a stock's shares are dropping so much. It could be an indication that the company is in trouble. You don't want to buy into a company that goes bankrupt in 2 to 3 years. Dividend yield will not matter in that point when they go bankrupt. My strategy is I look for good companies that happen to pay dividends. This way, you know a company is going to be around to actually pay you your dividends for a long time. If you take nothing else from this video, just remember this: do not chase yield. Now that's a quick rundown of how dividends work and how you can start building a dividend portfolio. Now let's get into the 4 dividend stocks in my portfolio. So you will probably have heard of 3 of the 4 I'm about to mention. So the first stock that I really like in my portfolio is Microsoft. So as you can see, I hold 94.4 shares of Microsoft, and it makes up 9.91% of my total portfolio. Now, I'm not going to go too deep into why I like Microsoft. They're one of the biggest companies in the world. They have a very strong cloud business, and they have a very good gaming division. And number 2 is Visa. So I own 15.9 shares of Visa, and it makes up 1.63% of my portfolio. Visa is also another company I don't think I need to go too deep into. They're one of the biggest payment processing companies in the world. And also, with the world going more and more cashless, I can only see future growth for this company. Now, the third stock is Johnson & Johnson. For Johnson & Johnson, I own 11.8 shares, and it only makes up 0.90% of my portfolio. This is a company I'm constantly adding shares to. Johnson & Johnson is one of the biggest players in their space, and they're super diversified in their portfolio. They operate in medical devices, pharmaceuticals, and consumer goods. So the fourth stock on this list is also the biggest holding in my portfolio, and that is AbbVie. So for AbbVie, I own 501 shares of AbbVie, and it makes up 24.98% of my total portfolio. This is a company that can be a little polarizing because there is some headwinds with this company. The main one being their patent for Humira, one of the best-selling drugs in the world, is about to run out. Humira makes up more than 50% of AbbVie's total profits. So a lot of investors fear losing patent on Humira can cut into AbbVie's profits. Now, if you've been keeping up with AbbVie, you know that they just finished acquiring Allergan, which is the maker of Botox. This should offset some of the losses they will take from Humira, but time will tell. But I'm actually really bullish on AbbVie, so having a high percentage of my portfolio dedicated to AbbVie doesn't scare me as much. So that was 4 of my favorite dividend paying companies that I own in my portfolio. They're not the only 4 companies, but they're my favorite at this moment. And with that, we've reached the end of this video. If you enjoyed it, please give it a thumbs up and subscribe. And if you want to get started on your investment journey with Robinhood, I'll leave a link down below. If you sign up with that link, you'll get 1 free stock. And with that, thank you guys for watching, and I'll see you guys in the next one. Peace.